Meet Marcus Lemonis, the multimillionaire who'll spend $2 million of his own money to fix a failing business and transform the people who run it.
And if you don't like it, you can pack your and you can go home.
The Profit, Tuesdays, CNBC Prime.
Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. Stocks hit new highs, the July jobs report released, and what the Federal Reserve says now. We're chock full of news, what it all means to you and your portfolio. President Obama goes on a cross-country tour to ring up support for his economic plan. Can Washington come to an agreement over a big new deal? And looking for the genius in the next generation. A rare interview with the parents of Amazon.com's Jeff Bezos. And a look behind the scenes at the Bezos Family Foundation. On the Money begins right now.
This is America's #1 financial news program. On the Money. Now, Maria Bartiromo.
Here's a look at what's making news as we head into a new week on the money. A disappointing jobs report for the month of July. The economy created 162,000 new jobs for the month. That was below the expectations of about 183,000. But the unemployment rate did fall to 7.4%, as fewer people actually looked for jobs. Job growth for the 2 previous months was revised downward as well by 26,000. It was a record-setting week for the markets. Meanwhile, the Dow and the S&P 500 both kicking off the month of August with a bang, hitting new highs on Thursday after dovish comments by the Fed earlier in the week. The S&P 500 closed above 1,700 for the first time ever. The markets continued to rise on Friday. Those comments came after the Federal Reserve's Open Market Committee wrapped up a 2-day meeting and announced it would continue buying $85 billion a month worth of bonds and mortgage-backed securities to help keep interest rates low. In its statement, however, the Fed used the phrase modest growth rather than moderate growth to describe the strength of the economy. That was a slight and subtle downgrade. The first reading of the gross domestic product was released this week, and it came in stronger than expected. It rose at an annualized rate of 1.7%, while expectations had been for an increase of 0.9%. The biggest drag was government spending with cutbacks due to the sequester. Consumer spending, however, was relatively strong. Here are some of the big companies reporting earnings this week. Exxon had a big miss, as did Chevron. Pfizer, Merck, P&G, and MasterCard all beat analysts' expectations. What a week. The July jobs numbers are out. The market's hitting new highs, all-time highs, and the Federal Reserve meets. What does it all mean for the economy and to your money? Joining me right now, Glenn Hubbard is author of Balance, the Economics of Great Powers from Ancient Rome to Modern America. He's also the Dean of the School of Business at Columbia University. Also with us is David Kelly. He's Chief Global Strategist with J.P. Morgan Funds. Gentlemen, it's good to have you on the program.
Glad to be here.
Thank you so much for joining us. So let's talk about what we learned this week, the jobs report, Glenn. Number one, the economy created 162,000 jobs for the month of July, below expectations, even though the unemployment rate went down a bit. What does the report tell you about where we are?
Well, we've got a sluggish recovery. We're not growing very fast in terms of GDP growth. We shouldn't expect blockbuster employment growth. But I think we're learning if we want to change, we're going to have to give the economy a jolt.
A jolt in what regard?
A jolt meaning better long-term policy, real clarity about where we're going that gives business people a chance to say, yeah, I want to invest again. I want to hire again. We're missing that jolt.
Yeah, we're missing that for sure. Okay, David, what about you? And I also want to talk to you about your theory in terms of when people reach 65, what they're doing. What is this employment?
I think the most interesting part about this is we had a mediocre jobs report, but the unemployment rate came down to 6.4 or 7.4%. And the reason for that is the labor force is just growing that much more slowly. It's only grown by 0.5% over the last year. And the reason for this, we believe, is that so many people are hitting 65. And when you hit 65, you're eligible for Medicare, and a lot of people just stop looking for work or stop working. But I think we're just going to think a little bit differently about how this economy works. I mean, it's 20 years ago I could run a pretty fast 5K. Now I can't, and it's not just a matter of more sugar. I've lost the capacity to run as fast, and this economy has lost the capacity to grow as fast. And so I think policy and investing needs to readjust to that.
Right, and we haven't seen the investment. I mean, look, corporates are sitting on trillions of dollars in cash. They could be putting that money to work, but they're not. They're worried about what's around the corner.
Right. They're worried about policy uncertainty. They're worried about the economy's growth prospects, the cost of Obamacare, regulatory uncertainty generally. It's not that they're crazy or mean. They're being perfectly rational.
Yeah. And I think it's not just that they're worried. It's the uncertainty that's the killer here. Absolutely. I mean, if you don't know if there's going to be corporate tax reform, you don't know whether you should be repatriating money now or maybe wait a few years. I mean, the more the government, Washington in general, can clear the air about what policy will be, the easier it's going to be for business.
All right, let's talk about the markets, because while all of this is going on, the markets are hitting all-time highs. This week, more money moving into equities, even as interest rates rose. Can equities continue to rise as rates go higher? And do you think rates go higher?
Yeah, I think they can. I mean, what we've seen in the past is if you start at low interest rates, like a 2% 10-year Treasury yield or a 3% Treasury yield, there's actually a positive correlation between interest rates and stock prices, because it really means the economy is getting better. Now, if rates were going from 9% to 10% on a 10-year Treasury yield, that's a different matter. Then we've got a raging inflation problem. But what we've seen historically is, yes, this can happen. And in fact, I think that is what's happening. Money is gradually moving out of fixed income into equities as the economic picture brightens. And
you're still recommending that?
Yeah, still, I mean, the market's not as cheap as it was, but relative to bonds and relative to cash, we'd still be overweight equities.
Glenn, the other question out there is the Fed. So we've got the Federal Reserve coming out with its statement this week, basically revising downward their review of the economy. They basically downgraded it. No mention of tapering. So when do you expect they will begin to taper? Can they actually begin to slow down the bond purchases in such an anemic recovery?
Well, I do think the Fed will begin to taper probably toward the end of the calendar year, maybe not in September. I don't think quantitative easing right now is having very much of a large impact on the economy anyway. It's really more a matter of the Fed communicating its long-term forecast. I think the Fed's still quite optimistic about what the second half will be. I share some of that, but not to the degree they have.
Mm-hmm. And David, you don't think the Fed's forecast is too optimistic?
No, I think that's right. They expect economic growth to pick up in the second half of the year. Everything that we're seeing suggests that will happen. But more than that, again, if I'm right that the economy doesn't have the capacity to grow that fast, even a small pickup really does reduce excess capacity and make it more important that they move away from quantitative easing.
No, we got a slightly pleasant surprise. The second quarter GDP coming in slightly stronger at 1.7%, but we're still looking at a below 2% grower. Really?
Yeah, that's not acceptable. A typical recovery from a deep downturn is very sharp. We haven't seen it. Even with the financial crisis, we should be doing a lot better than 1.7%.
I think it was $80 billion that came out of bond funds last month and a half or so. Yeah. What are you telling clients to do? Keep money in fixed income, take it out, put it in equities?
Obviously, we just talk about overweights and underweights. We don't want people to make violent moves. But in general, yeah, just check their portfolio. And if they're underweight equities and overweight fixed income, put more money in equities and get those bonds down to short durations. Make sure you're not taking a leverage bet and long rates staying low forever. Because the one thing that we feel most confident about is that over the next few years, as the Fed removes QE, as investors lose their desire to buy bonds, interest rates will go up.
Yeah. And Glenn, you're the dean of Columbia's Business School. You're probably gearing up for the new semester soon, huh?
We are. We've got hundreds of new students coming in, eager to participate.
And where are the best and brightest going right now in terms of getting jobs?
You know, it's interesting. The big growth for us has been in entrepreneurship, in starting businesses and in actually participating in emerging companies. It's a sea change.
That's really interesting. And that's really going on across the country, I think.
Absolutely.
Entrepreneurialism is, it's easier to start one's own business.
Well, Washington's making it a little hard, but yes, it's certainly more fun.
Once again, Washington gets in the way. Glenn, David, good to have you on the program.
Thank you.
Thanks. So appreciate your time today. Thank you. Up next, On the Money for the White House in recent weeks. It's all about the economy, the economy, the economy. Well, we will be putting the president's renewed focus on the numbers to work. And then later, a rare interview with the parents of Amazon founder Jeff Bezos. They raised the billionaire who changed the way we shop. Now they're helping high schoolers who dream of changing the world.
When they leave here, they want world peace. It's you know, okay,
everything's game.
We want to solve all these problems.
And here's the bottom line. I'm willing to work with Republicans on reforming our corporate tax code as long as we use the money from transitioning to a simpler tax system for a significant investment in creating middle-class jobs. That's the deal.
The president says he's got a deal to create jobs in exchange for reforming business taxes. Will it work? Here for an analysis on the administration's recent economic push is Glenn Thrush, senior White House reporter at Politico, and Tony Fratto, former White House deputy press secretary. Gentlemen, good to see you. Thanks so much for joining us.
Maria.
Good to be here.
So the president went to an Amazon.com facility in Tennessee this week, laying out a plan that he called a grand bargain that would create jobs, particularly middle-class jobs, proposing a rewrite of corporate taxes. Glenn, what do you think of the plan? Walk us through it. How do you think it fits into the president's economic agenda?
Well, the plan is a little bit of a, it's kind of a mixing up of leftovers. He's had this idea for about $50 billion of infrastructure improvements, schools, highways, really a drop in the bucket for the $2 or $3 trillion of infrastructure improvements we've seen studies show. And he's sort of blending this by making it dedicated to this corporate tax restructuring. It's definitely sort of a rejiggering, a new idea, but its intention is more, I think, political at this point in time than policy. What he's trying to do is split the Tea Party folks away from the mainstream Republicans, the Ray LaHood Republicans, the Susan Collins Republicans who believe in infrastructure improvement. We'll see if it works. He needs anything he can right now to sort of shift the dynamic, which is basically stagnation.
Yeah, more politics. Let me ask you this, Tony, because some in the business community, while they support the idea of a lower corporate tax rate, they say that the president's plan doesn't go far enough because it doesn't do anything to individual taxes. And as a result, a lot of businesses will file as individuals, and so small business is not really included in this.
Well, I think they would say that it doesn't do enough, actually, even for large corporates. Also, in terms of getting the rate low enough, I think the president's talking around 28%. They would like to see it get down to 25%, and they're not talking about territorial tax system either. So it's not really winning a whole lot of friends. And then you're right on the individual side. We know that the vast majority of firms are file as individuals, sole proprietorships. You cannot deal with corporate tax law changes and not deal with that group. You're not going to win enough friends to get the ball across the finish line.
So, I mean, what about this political framework to, looking at a renewed focus on the economy? Even the language, grand bargain, has been the term used for any number of expected cooperations between the White House and Congress, and it hasn't materialized. Is this a legacy move by the president? Is it an economic plan with legs?
I think it's not a Hail Mary. It's more like it's an attempt just to get back in the game, to get off the sidelines. I mean, the president has been nowhere for the past 6 or 7 weeks. We've been dealing with a succession of scandals, some foreign policy challenges that he doesn't really exert a lot of control over. We're entering this massive debt ceiling debate in the fall. He's just been kind of in stagnant water here. And I think, Tony was pointing out some very specific policy issues with this proposal, which are very clear. But I don't think the White House is thinking in those terms at all. I think they just want to start a conversation.
I think Glenn's right. I mean, he talked about, changing the dynamics of the conversation here in Washington and getting the president in a position where he can talk about something other than the scandals in IRS and other things that he's had to deal with over the year. I think that's really where it is. If you look at the president's, poll ratings this year, they've trended lower even as the economy has gotten modestly better and some of the data have been better for him. Going into these fights into the fall, I think he's trying to lay the predicate a little bit better for himself, to put him on better ground to fight on going into the fall. But talk about grand bargain, you can say grand bargain seems to equal dead on arrival. If you say grand bargain, there's just aren't the elements for it, whether you're talking about big fiscal plans or tax reform plans. I just don't see any momentum for it at all.
So what is the metric to look at for success? I mean, what is it going to take to move the needle on the middle class?
The jobs numbers haven't been anywhere near what the White House would have liked. I think they feel very frustrated because the sequestration took hold and the Republicans are still talking about cutting spending. I mean, we've seen a lot of those efforts go down in the House recently, but the White House really feels that they need to keep their foot on the accelerator to keep this recovery going, and they feel that it might be losing steam. But what I would say that I'm hearing from Democrats is the guy needs to have more of a coherent message going into the fall, or he's going to get creamed.
All right, we'll leave it there. Glenn, Tony, good to have you on the program. Thanks so much.
Thanks, Maria.
We appreciate it. We'll see you soon. Up next on The Money, what's the secret to raising a game-changer child? The parents of Amazon.com's founder mentor today's teenagers, and they know a thing or two about supporting big ideas. Jeff Bezos, your son, tried to take his own crib apart with a screwdriver. What did that tell you about the future for him?
That I was in trouble.
Well, if your son grew up to be one of the digital era's most successful entrepreneurs, you might be content just basking in your pride. Not if you're Jackie and Mike Bezos, parents of Amazon.com founder and CEO Jeff. They've invested in a future generation of leaders through the Bezos Scholars Program, which we visited at the recent Aspen Ideas Festival. Turns out it's not that long a trip from Amazon to the mountains of Aspen.
We came from can-do people. We came from people who thought most projects were things you could solve in the garage. I think that that's what humanity strives to do, is understand one's surroundings, but then go beyond that.
As heads of a family foundation, Mike and Jackie Bezos pay it forward.
We're looking for students that are going to be leaders. We bring them to Aspen, to the Ideas Festival, but then there is a payback. We ask them to go back and put on their own Ideas Festival in their community.
Building on the Aspen Institute's annual festival, Bezos Scholars are 12 students and teachers developing local ideas from exposure to global thinkers.
It opened up a universe of ideas that I would never have had access to.
The idea for the foundation came shortly after Amazon went public, and we realized that as a family we had an opportunity and also what we refer to in the family as a joyful responsibility to do something beyond ourselves.
So what happens after they leave Aspen, the students in the program?
They have to apply for a grant from the foundation. We work with them if the proposal doesn't look, too polished in the beginning. We work with them until they get it to a stage where it can really be given consideration. And the festivals that they pull off are nothing short of fantastic.
Well, my community, there's kids who are succeeding they're going very, very far, and then there's kids that are really not getting the education that they deserve. So hopefully I will create a festival that will somehow help close that gap. I can't wait to, take an abstract idea and put it into action.
We are 5 from the African Leadership Academy. We all have different interests. So we are going to combine all and bring them together. So we are going to bring children, the youth that are passionate about science, that are passionate about politics. So for my festival, I want new discoveries.
When they leave here, they want a world peace. It's
everything's game.
We want to solve all these problems. We try to narrow it down to something that is achievable, doable, rather than being too wide.
Yes, but we want them to reach.
Oh, yes.
You have the resources to do a lot. What is it about a student that attracts you?
We're very interested in the youth voice. We saw in our own family that our children were ready to be co-creators of solutions much earlier than they were given public opportunity. That was what we wanted to provide for young people today.
Amazon.com founder Jeff Bezos has made a $25 billion fortune thanks to the growth of the world's largest online retailer, a company now worth more than $140 billion. I was reading that Jeff Bezos, your son, tried to take his own crib apart with a screwdriver.
Yeah.
What did that tell you about the future for him?
That I was in trouble.
Why?
He wouldn't take no for an answer. You could dialogue all you wanted with him, even at 3, about you're not ready for a big boy bed. And then he just took it upon himself to go and find a screwdriver. Of course, he could not really dismantle his crib, but it was that message of that can-do spirit. And I think most young people have that. I don't think they have the opportunity to use it.
You two invested your retirement savings in the early years of Amazon.com. That was a big risk.
Yes.
What made you take that risk?
Well, it wasn't the entire retirement funds, but a large part of it. And Jeff approached us for this crazy idea of opening a bookstore on the internet. But we believed in Jeff and what he could do.
It was an investment in Jeff, not in a yet unnamed company. And if he had followed my original advice, which was, can't you do this on the weekend or after work, we probably wouldn't be buying so much online right now. The investment that we've made in young people has paid off every bit as much as our investment in Amazon. The investment in these children.
So that was a big idea, Amazon. Is there a Jeff Bezos in the Aspen Scholars Program right now?
Oh, yes.
Several of them.
My thanks to Jackie and Mike Bezos. Up next, a look at the news this upcoming week that will have an impact on the money, and then rising concerns about French bread. Are garlic changing tastes, changing the tradition of the table in France? Ooh la la. As we take a break, take a look at how the stock market ended the week. For more on our show and our guests, check out the website, otm.cnbc.com. And I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. First, though, here's a look at the stories coming up in the week ahead that may move the markets and impact your money this week. Earnings season slowing down. The big names we'll hear from include Disney, 21st Century Fox, which recently was spun off from News Corp, and Time Warner. Monday, we get a snapshot of economic activity with the non-manufacturing sector and the ISM index coming out. On Tuesday, Microsoft co-founder Paul Allen will release his debut album, Everywhere at Once. All the proceeds will go to the charitable organization EMP Music. On Friday, Apple heads back to court to argue for a product ban on Samsung smartphones. And finally today, are the French shrugging when it comes to la pain? The average Frenchman consumes just half a baguette a day. That's down from a whole loaf back in 1970 and more than 3 at the turn of the last century. The French eating less French bread has led to an awareness campaign modeled on the Got Milk ads. This is from the Bakers Lobby, who hope that a reminder to buy bread will create, voila, a renewed French connection to the classic carbohydrate. That's the show for today. Thanks so much for joining me. My guest next week, actor and technology investor Ashton Kutcher. He plays the late Steve Jobs in a new biopic. We'll talk about the movie as well as all his technology investments. That's next week. Each week, keep it right here where we are on the money. Have a great week, everybody. I'll see you next weekend.